Good morning, candidates. This is an important news for the interview. UBS takes over Credit Suisse. Credit Suisse crisis. Swiss government said it would provide $9 billion to help UBS meet the possible losses while taking the Credit Suisse. And Swiss National Bank will provide 100 billion of liquidity. UBS Group AG on Sunday agreed to take over its ailing rival Credit Suisse AG for $3.25 billion. The deal was reportedly brokered by Swiss regulators to halt the decline in customer confidence in the global banking system. According to a report, the Wall Street Journal, the deal would create a banking behemoth which will account for 30% of Switzerland's domestic loans and deposits. This is the biggest bank to fall since 2008 financial crisis. It closely follows the fall of three banks in the United States, thus pushed the US government to take prompt decisions and stop the possible contagion. The Swiss government said it would provide 9 billion to help UBS meet the losses it might incur while taking over the Credit Suisse. Additionally, Swiss Bank will provide 100 billion of liquidity to UBS to facilitate the deal. What is Credit Suisse? Credit Suisse is a Zurich-based bank founded in 1856 to finance the expansion of Swiss railroads. Before its collapse, it was Switzerland's second largest bank by assets, behind only UBS. The bank had two main businesses. One was managing money, the other was creating investment products for wealthy clients across the globe. In the last few weeks, the bank was trying to spin off its investment arm, which has been marred by a long stretch of scandals and heavy financial losses. Why UBS agreed to buy Credit Suisse? UBS is the largest bank in Switzerland. It was believed that if it is not bailed out, Credit Suisse may soon become insolvent, leading to a wider crisis in the Swiss economy. It would have impacted UBS. The regulators were eager to curb panic, and according to Wall Street Journal, UBS has long been a part of any state-backed solution for Credit Suisse. The talks between the two banks started on Wednesday and ended over the weekend. According to reports, Swiss authorities were under pressure to make the deal happen before Asian markets opened on Monday. It was primarily due to Credit Suisse falling health and its share price. On Friday alone, the shares of the bank fell by 8%. So this is what it is. Candidates, this you must know about this when you are going for Exim Bank interview or say State Bank of India, Probationary Officer India. What were the problems with Credit Suisse? Some years ago, it gave money aggressively to the asset management company, Archegos Capital Management. However, the company collapsed in 2021. According to reports, Credit Suisse failed to exit the deal on time and lost over 5.5 billion. Second, the loans to supply chain network Grensill Capital were also defaulted upon. The case has been going on over 5 years. Bank has lost nearly 10 billion in the two cases. It exceeded the bank's current market cap of 8 billion. Third, the bank's top leadership has seen several rejigs since 2020. In 2020, then CEO Jane Thiam was forced to quit after a spying scandal surfaced at the bank. Switzerland financial regulator said the bank misled it about the scale of surveillance. His successor, Thomas Greenstein, was the CEO until July 2022. Credit Suisse then chose restructuring expert Ulrich Korner as CEO. He is the current CEO of the bank. Former bank chairman Urs Rohner quit the office. So some changes in the office. How will the fall of Credit Suisse impact the banking sector? Credit Suisse was among the most deeply integrated banks globally. It worked closely with investors and banks from various countries. The bank stocks continue to see a sell off globally. In India on Monday, Nifty Bank Index was down 400 points, market data showed. Thank you so much.